Oh, well, bond yields igniting angst on Wall Street and in the White House. Taking a look right now at the 10-year, climbing higher as investors continue to digest these tariff developments. We're above 5 basis points once again. The yield is at 4.483%. The moves in the bond market really were the bigger story this week, in particular as the trade war, if you will, kicked off with China. I want to bring in Kingsview Wealth Management Chief Investment Officer Scott Martin. Scott, what is your take on not just what the action we've seen in the bond market, but also the message that sends? We keep asking this question over and over, Scott. Was this the Chinese? Was this the Japanese? Who was who was doing the selling, and why? And it's hard to kind of trace that, but we still have to kind of ask ourselves what happened this week in the bond market.
Yeah, Cheryl, I'll tell you, the bond market is telling a lot of things, isn't it? And who is selling, we'll find out later. We'll find out soon. We get some of the reports in. And it was domestic, too, Cheryl. I mean, could it be some hedge funds or some other investors that are getting out of positions that are liquid, by the way, that may be illiquid other places with regards to other positions they have? I wouldn't use the word beautiful when it comes to the bond market, as President Trump has said. I wouldn't say it's ugly either, but it is volatile. And that's something, Cheryl, that if you look at times like these where there's a rush to liquidity, a rush to the door, as we saw in the stock market, especially last week, the bond market usually is the stabilizing factor. It has not been so, and even today it's been kind of all over the map. So this is very kind of it's a little scary when it comes to the fact that not only are equities kind of dangerous these days, bonds appear to be as well. Right.
No, certainly, and I'm saying that was a big kind of a big spook moment, if you will. I've been kind of going through in particular what we heard from J.P. Morgan today, because we kicked off earnings season with the banks, and I want to get kind of your thoughts about the results, but also what you heard on the conference calls. In particular, when I was going through the comments from J.P. Morgan's CEO, but more importantly, the CFO, you definitely saw more commentary from both of them about the concern when it comes to the consumer. And if any bank is going to have their eye on the consumer and the credit card accounts and the auto loans and the mortgages, it's going to be J.P. Morgan. What did you think?
For sure, and we've seen a lot of interesting dichotomy over the years, especially in the last couple of years, between J.P. Morgan's commentary and Bank of America with Brian Moynihan and his counterparts with regards to the concern, or maybe the not concern over consumers. So, Cheryl, I think some of that concern is well-founded, but J.P. Morgan has basically been managing their books a little bit more conservative lately, which I think is good, especially for entering a time like this. And they also talked about business loans on there, too, possibly drying up, maybe being at a little bit lower demand with respect to the business outlooks that we're seeing. Here's the thing, though. J.P. Morgan posted great numbers. They had some good trading numbers as well because of all the volatility. The problem is, if you want to talk about earnings being backward-looking, Cheryl, there's the evidence of backward-looking. Going forward is something that is going to be difficult for any bank to report on, but it's nice to see that we had good earnings at least coming in to this period.
Well, but again, that's where the commentary, and I mean, we did get a little bit of guidance from J.P. Morgan, at least on the fiscal year 2025 outlook. Real quick, we've only got a minute left here, but you say move over big tech. You're looking at small tech. Talk to me about what you see.
Yeah, so I mean, if you look at things like we have up on the board there, Spotify, Roku, Shopify. I mean, these are names, Cheryl, that we know well, and we've talked about them over the years that have had amazing runs and then also had amazing crashes. But these are companies that have come down to levels that are just absolutely, I think, as screaming buys if you have that 2 to 3 year outlook, because these are sell-offs that get overdone. The market runs to liquidity. They run to bigger companies, and so the small guys get left behind. They get trashed. They get smashed. That's when you got to pick them up if you're a long-term investor.
All right, Scott. Well, certainly, we have had a lot of conversations this week about if you're looking for a specific stock and you want to buy it, maybe this is the time. We shall see how it plays out. Scott Martin, thank you so much.
See ya.